And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And I hope everyone is gearing up for a nice long weekend. But as usual, it is supremely and very important that you prepare for not only next week, but beyond. We are in the throes of a pretty significant shift taking shape here in the markets, and it continues to firm up. So let's take a look at what we're going to be covering today. First up, review of the current markets. Where exactly did we close the week? Another volatile period. Also, some of those top headline news that drove price action for the week and that are also impactful going forward as well. From there, what's up with earnings season? We did get the start to Q1 earnings, and I'll share with you some insights there because next week is a very big week for earnings. We have some very heavyweight names, Tesla, Netflix among them, that will be reporting next week. Also, let's see my verbiage here, but basically how you can position yourself for the current market environment. I will share with you what is shaping up out there. And again, with an eye toward getting everyone ready to take advantage of what's taking place. Let's take a look at some of these news items for the week. We did see core inflation came out. It did rise. However, it was the smallest increase in 6 months. I'm pointing that out because investors this week originally did look at these inflation numbers and were really searching for what I call the silver lining as it relates to not selling off despite an increase in inflation. Also, wholesale prices came in. They did jump in March. It was due to high gas and food prices. This is another number that is inflation data. And also initially investors were really combing through the report and trying to uncover positive news there. So we did see an initial rally in response to these inflation reports. Bond yields rose to their highest level in 3 years. We'll take a look. I believe it's now even a longer period. We're up in that 2.8 area for the 10-year. So you want to be aware of that. That's one of the many drivers as far as price action in the markets. And then retail sales and consumer sentiment numbers were generally positive. The primary surprise here is despite very high prices for gas and food, we did see a rise in March for retail sales, and then consumer sentiment in April jumped higher. So that is a very interesting backdrop. There are a couple of retailers I'll share with you that are responding positively, but by and large, a lot of these retailers are still very down and out. Next week, there is going to be housing data released. Manufacturing PMI will come in, but other than that, pretty quiet. As a side note, we did see mortgage rates reach 5% this week, and that's the highest level since 2011. So I imagine the housing data, perhaps not this swiftly, but we will see a continued deterioration. Certainly those housing stocks have been selling off of late. So let's go ahead, move on, take a look at these markets. Where do we stand? And actually, I'm going to start with the S&P 500 as it's a broader based gauge of what is taking shape. And on this daily price chart, we can see that the S&P 500, now let me confirm this, because what you can do with StockCharts.com is over on this left side, they present you with the numerical value for that 50-day, which at this point is 4418. We can come right up here and see where we closed, and it's 4401. So unfortunately, we did close the week just below this red 50-day simple moving average. Now, we did do that on Tuesday. We were able to recover on Wednesday. So these nominal dips not as concerning. However, our outside momentum indicators are negative. This is your RSI below 50, trending lower. Likewise with the stochastics. So overall, not the best as far as a backdrop to be putting a lot of new money to work. This is an environment where you really do need to push your shirt sleeves up and drill down behind this surface because there are very vibrant areas beneath the broader market indices. So here we are with the Nasdaq, another daily price chart view. And I did want to point out to you on this Nasdaq, unfortunately, we did lose this potential uptrend last week and continued deterioration. Nasdaq down almost 2.5% for the week, residing now below each of these moving averages, outside momentum indicators negative. And then I posted this January low as your next area of potential downside support. And this is all about tech stocks. We did see those FANG stocks get hit as the week progressed. Initially, they were faring okay, but a lot of deterioration in those bigger growth names, which is very telling. From here, let's take a look at some of these S&P sectors. And here we have those 11 underlying sectors in the S&P 500, a 2-month daily price chart view. And then I like to add this relative strength indicator. I want to see where that relative outperformance is, sort that in descending. So up here, your stronger areas will present themselves relative to your weaker areas. So I'm going to go ahead and update this after the markets close, and no real shift. What we can see is a theme that has been developing over the last several weeks at least, and that is these defensive areas appear at the forefront. Consumer staples, we can see utilities, and then also REIT stocks and healthcare up at the forefront. But two newer developments, if you will, and one is the fact that material stocks, top performers for the week. Take a look at this particular advance. The industry group pulled back very orderly to this upward trending 21-day simple moving average. It did hit a new near-term high. This is your all-time high back here, but into the close, it did fizzle, for lack of a better word. But material stocks, this is all about commodities and commodity related. We can also see energy up here in the forefront. It had been lackluster for some time after a very sharp advance, certainly not out of line given the big move year to date that these stocks have had, but they did wake up this week and definitely outperformed the broader markets. S&P was down almost 2%. Energy stocks up over 0.5%, not a tremendous outperformance, but certainly one worth noting. I know a lot of people were ready to throw the towel in on these energy stocks, but no, sir, they are definitely in a confirmed uptrend here. So as usual, we want to really zone in as well on the weaker areas and make sure that you're not overweight. We've talked about technology in the past. This is in line with the Nasdaq, where this uptrend actually had advanced further to the upside. A lot of this Apple and Microsoft big component of this sector, but we were seeing vibrancy in other areas as well, software and semis, but not so over the last 2 weeks. And we can see that the group is down. It was the worst performer for the week, down 3.8% as these growth stocks are trending lower. One other area I did want to share with you is financials, and this is something I've covered in the past in the sense that financial stocks were down 2.6% this week. So there were two factors here. One is these bank stocks are coming out with generally mixed. JPM missed their numbers, so these larger bank stocks are not coming through. Next week, we're going to see a lot more in the way these banks reporting. Perhaps some of these regional banks might fare a little bit better. But the inverted yield curve is not good for bank stocks. So two areas in this lagging space. Communication services, lots of headline news here, certainly surrounding Twitter and Elon Musk, his activity with certainly the stock owning, being on the board, not. Now he wants to purchase the entire company, but Twitter is a heavyweight in here, as is Google. And Google was down 5%. So that's another area that is not faring well. A lot of heavily well-known names in the internet space that are in that XLC. So from here, let's drill down even further. And see if I can get to that area here. It is right here. So here we're looking at some of these sub-industry groupings, and these are areas that are moving the markets of late. And in particular, we do have the 10-year Treasury yield. I will go through those that are most relevant here, but for me, they are a very wonderful way to use these ETFs to really get your arms around what is taking shape and taking place, as I said, beneath the surface. So again, that RSI descending, I'm going to go ahead and update that. So we're looking at a daily 2-month price chart. So up here in the forefront, I talked about this, these Treasury yields 2.82% on that 10-year. We can quickly pull up a weekly to provide a little more in the way of precedence, and we would have to go back to this 2019 period to see rates this high. So that is, of course, in line with the Federal Reserve's policy that is expected to be a little bit more aggressive than initially anticipated. And these higher rates are, of course, one of the reasons growth stocks are struggling. Next up, I wanted to share with you this agricultural fund, and it is an ETF. DBA is the ticker symbol. So this is in line with those commodities. We did see wheat stocks, corn, a number of other grain and agriculturally related stocks. I'll share with you a bellwether heavyweight name that did receive a price upgrade today that really spurred a move in the Dow. But for now, we're looking at this DBA agricultural fund, indicating again that move into these commodity related areas. Gold up here, GLG is the ticker symbol. It was up 1.4%, but really well, nice move given that the S&P was down almost 2%, Nasdaq down almost 2.5%. So you can see that after this spike, this was in response to the initial Russia's invasion of Ukraine, and then it pulled back very orderly to this 50-day simple moving average. We are currently in the throes of forming the right side of the space. Take a look at this MACD, black line up through the red, indicating that this consolidation period for now has ended. We're entering a new uptrend in GLD. Moving along, surprisingly, biotech stocks still up here in the forefront. They did falter this week, down 1.9%, but they are staying above this 50-day simple moving average. And that is interesting in the sense that these are very risky. A lot of these names do not have earnings, but for now, holding in fine. And as mentioned before, let's just take a quick look at the volatility index here. And we can see that volatility is waffling. We did close here at 23, so still elevated. I mentioned in the past that 18 level is a good mark. If we can get below that, that is going to indicate that there is more certainty among investors, more confidence. As you may know, the VIX is also known as that fear index. So at these elevated levels, it is pointing you toward the fact that we very well may have continued volatility as we've seen over the last many weeks with the intraday price swings that are taking place as different headline news come out. So again, these weaker areas, the semiconductor index has just gotten clobbered. We can take a look at this weekly price chart, a little bit even more telling as it relates to really just how much this index has come down. I'm going to share with you a semi stock that reported earnings this week and give you a better sense of this particular index and what appears to be taking shape. Another area, of course, the Nasdaq down here in this lower, weaker area, and then software stocks. They were so close to trying to reverse their downtrend. Unfortunately, down 2% for the week as this downtrend reversal with the Fed's announcement that they intend to do what they can to fight inflation, but have a dual approach to that that is more aggressive. So we can see software stocks pulling back in line with that news. So from here, I'm going to take a very brief break and we have lots more to cover. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report.
In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer.
And we are back. I mentioned that earnings season has started, kind of trickling in this week. It really picks up quite a bit next week, but up next here, I did want to share with you Taiwan Semiconductor Manufacturing, TSM is the ticker symbol, and they are one of the largest manufacturer of chips. Now, they have been kind of down and out here of late due to increased costs. They are expanding their production facilities and so forth. But certainly today's earnings report bears reporting because the company crushed estimates. I'm quoting a headline. They came in ahead of estimates and management guided higher as it relates to earnings for the remainder of this year. And usually that is quite constructive for a company. But let's take a look at an intraday. It's going to provide a little more insight into the broader market's reaction to these numbers that by most standards are very strong. Take a look. We did initially on the open today get this big spike rally on the news, and it fizzled into the close. So in essence, the sentiment as it relates to these semiconductor stocks is overriding this positive news. And we'll see next week. ASML, a big semi name, is due to report on Wednesday. Depending on their results, we can take a quick look here. See if I can pull that up because it has gone down certainly with the index, has a very similar look to TSM. But again, we will be on the lookout to see how the markets respond because really earnings season is an incredibly wonderful time to assess investors' sentiment. If investors are shrugging off weak numbers, that is telling you that there is very, very strong confidence in the markets. But in this case, when they are shrugging off good news, that's not what you want to see. And ideally, this is industry specific, so you can know to look elsewhere because from here, I will share another stock that reported their earnings this week, and you will see certainly a different reaction and a different, certainly going into the numbers. This is the Simply Good Foods Company, SMPL. I'm going to pull up a full quote. Sometimes this can be really helpful if you're trying to really get behind what is happening. And you can see which sector that it is a part of. It's consumer staples, food products. This is an area that is outperforming here of late, particularly those companies that have an ability to raise their prices so that they can keep their growth. They have a way to buffer against increased cost. So taking a look here at SMPL, the company did report right here, and we can see the clearly more constructive response. Actually, it was April 6th, I believe it was somewhere in here, and they did come in with 44% year-over-year earnings, 30% above estimates, and we can see how the stock was propelled higher, big volume base breakout. And as a note, TSM was also had a 43% year-over-year earnings. So you can see the clear-cut difference in the response to those earnings. Let's take a look at another company that reported this week and was very impactful as it relates to money flows into specific areas. And this is Delta Airlines, DAL, gapped up 2 days in a row, very heavy volume. The company cited the fact that they were able to increase airfare prices, which in turn helped them offset high oil prices or gas. And then equally important is the fact that individuals are traveling a lot more. So they're seeing a lot more traffic. So DAL had this nice gap up here. A couple of other airlines in sympathy or in response, also not quite as big of a move there. But getting back to Delta was the fact that we saw a lot of hotel related stocks. There was another headline as well. JP Morgan CEO Jamie Dimon came out and said in their credit card, their Chase credit card division, they are seeing a big pickup in credit card use for travel and leisure. So that really provided the needed spark to get some of these hotel names upward moving. Cruise lines also had a couple of positive headlines relating to bookings for this year, but still very much down and out in that area. And also, I wanted to share with you, we talked about the move into some of these commodity related stocks. And this is another phenomenon that is taking place in the markets where an analyst upgrade or downgrade will spur moves in the market. Let me just go back to the semiconductor index. Those of you that are not familiar or not subscribing to my MEM Edge report, I would urge you to use that button below to do so because this is something that I highlighted in my report back here. Semis began to deteriorate prior to the downtrend in technology. The reason is because analysts actually, a major tech analyst came out lowered his outlook for semiconductor stocks because anticipating weaker demand into next year, that in turn drove down semiconductor stocks. So the point here is that these analyst upgrades, downgrades, price target moves in with the lack of certainty in the markets are really having quite an impact. So let me share with you a name today that had a price upgrade that in turn impacted other stocks in the group. And this is Caterpillar, 4.4% gain today with the stock poised to break out at this 230 level. We could see this nice MACD crossover here. And the upgrade had everything to do with the move into commodities and mining. Also, infrastructure is another big reason Caterpillar is in that industry as well. But in turn, we did see other related stocks. This is Deere, DE, on the move, also poised for a base breakout. And then we can also look at IGF, which is an infrastructure ETF. Now, you're not early, it's had a significant uptrend here, but more recently it is consolidating. So something to keep in mind. It has a 2.2% yield. Let's look at another stock that was in the news today where management came out and guided higher and subsequently a big spike in price. This is Nike, 4.7% move. And it was all about the management talking about the fact that they're seeing increased demand in China, and that's a big part of their sales. This is despite COVID lockdowns, and investors found that very uplifting, and the stock did move up. We are still in a downtrend, however, with Nike because it is below this 50-day simple moving average. We can also see it has a relatively high PE, even though it's down here. It's trading at 35 times earnings. And so another consideration as it relates to the market's sentiment surrounding these growth stocks. I did want to share with you also another retailer that reported a couple of weeks ago. This is Lululemon. They came out with great numbers. So here's that similar gap up, met resistance at this 200-day simple moving average, but we had this nice 2-week period of consolidation after this relatively significant move. This week, we did see a break above resistance, so keeping an eye on that name because you can see historically it has gone on to great heights. But again, that market pressure as it relates to retailers may hold the stock down. So from here, I wanted to share with you, we'll just take a minute and look at some of these companies that are due to report next week. And one in particular where analysts are raising estimates going into the number. And certainly in more normalized markets, that is quite constructive. So first up, we can take a quick look at headline leading Tesla here. Certainly Elon Musk has been in the news quite a bit. They're due to report on Wednesday. I'm going to share with you what is shaping up. And unfortunately, we're not in a what I call normalized market. So we may not see this materialize, but this is a cup with handle formation. It's where the stock hits a new high, pulls back, and advances to about 2/3 or a third below that high. So what you would be on the lookout for as it relates to a cup with handle base breakout, well, oh boy, I need to get my crayons sharpened here, but this is where we are forming that potential handle. So what you're going to be on the lookout for as it relates to this type of base breakout is a break back above this 1150 level that would signify a base breakout. So we are still in positive territory with the MACD, RSI dipping below here, but we've seen Tesla come out with good numbers, and if the market just doesn't have the appetite for a high multiple, it trades at 200 times trailing, we may not see that constructive response that you normally would. Another company I talked about, ASML, we can take a quick look here because this is a group that's also on the move to the upside. Lockheed Martin due to report on Tuesday. And we can see that it is in the throes of breaking out of this base at 480, potentially pull back to this upward trending 21. Now, this is on my watch list for sure because these defense and aerospace companies are picking up. They picked up over the last week. So I want to see how Lockheed comes out. It's a bellwether name, how the markets respond. And then from there, add stocks to my MEM Edge report as warranted. One last name on this earnings side is a company that really sold off. These rail stocks just fell out of bed. Again, analyst news related as it relates to their freight carrier levels. So we can see that it's attempting to reverse here. It is, although I will say analysts have revised their estimates higher. It's a 1.9% yielder. So I'm going to be closely watching this particular stock as well. And I did want to mention to you below this video, you will see a link to a webinar that I did last night. And it's really informative, talks about how to get in front and how to perform well despite this current chaotic volatility. And also it details a mentorship that I will be offering at the end of this month. Super exciting. Access that link below. Also, take a look at my MEM Edge report special. You can trial that using the link below as well. Have a wonderful long weekend. I look forward to seeing you here next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.